How to trade with a full-time job. So most people think that trading with a full-time job is impossible, but honestly, I think it forces you to become a better trader. You don't need to stare at charts all day to make money in the market. You don't need 6 monitors. You don't need to sit home trading all day. What you really need, and the reality is all you really need is a plan, a repeatable system, and your phone. So I'm a chemical engineer and I don't have time to sit around watching candles move all day long. And honestly, working a full-time job forced me to become more disciplined and more patient and more selective with my trades. So in this video, I'm going to show you exactly how I swing trade while working a full-time job so you can do it too. So why is swing trading best? So most people with full-time job swing trade, and it's by far the best style for trading. Not just with a full-time job, but in general. Um, and here's why. It requires less screen time. It gives your trades time to work. It reduces emotional trading, and it's better for busy schedules. So say you're day trading and someone interrupts you at work. That could completely ruin your trade. But with swing trading, you already have your entry, your plan, your stop loss, and your risk management set beforehand. So you simply just let the trade work. For example, last week I bought RKLB and it's moved over 34% within the week. So I saw that set up forming over the weekend. I was looking at my charts and I saw that it made this initial move and it pulled back. So during the week, I was kind of watching this key level here and I saw on Friday that it broke above it. So what did I do? I already had my plan. I've been watching the stock. I bought a little bit of it. I bought some of it, and then I set my stop loss, and then I just let it go. And then it kept going and going and going. And at the end of the day, what I would do is I'd go look on my phone and see what it looked like. And I'd decide, does it still look strong? Do I want to take any partial profits? Has it moved up quite a bit and I feel like it's a good place to trim or sell a few shares of the stock and then hold the rest? Or do I just want to keep holding and then wait for it to keep working? So that entire process takes about a minute and I can do it all from my phone. And then you just do that same thing over and over and over. And then the next day you watch it. Did it keep going up? Okay, maybe I'll trim here. It's gone up 3, 4R my original risk, so maybe 5R. So now I trim some, move my stop loss to break even. Say I bought it at 89 and my stop loss was at 85.85. Then I'll move my stop loss to 89 and then keep letting it go. Or I'll move it even higher and just kind of keep trailing so that if it drops below my stop loss, then it'll sell the whole thing. But at this point, it's a risk-free trade and I'm guaranteed profits. So easy as that. And I've done that exact same thing. I did it a little while ago on MU. I saw MU made a big move. It's been consolidating, pulled back a little, and then right here it broke out. I bought some, it consolidated some more, and then it broke out even more. And since then, it's gone from $449 to over, what was this, 816, and it's at 715 right now, and I still have it. So it just keeps going. At the end of the day, you check, you see, does it still look strong? Do I want to sell any? Do I want to adjust my stop loss? Rinse and repeat. Did the same thing with SNDK. SNDK, this stock has gone from, what was it, like $100 in January. No, it's gone from $240 to over $1,000 in 5 months. So this one, it had this huge big move. It moved sideways for a while, and then over here, I saw it break out, and then it went up, up, up. Kind of consolidated some more, and then there was another entry. You could have bought it here, here, or here, and then it broke out, up, 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 all part of the plans. You just buy, hold, and then let them work. And then when eventually, if they drop below your 10 SMA, then you can sell the whole thing or decide what you want to do. So here's the process I go through every week and every day for swing trading. So every weekend, I go through the charts and I look at my scanners. So I look at my 6-month gainers over here and I just go through the charts. I'm like, any good? No, no. Just look through the charts, see if you find anything that looks good. And then as far as charts that look good, I'll talk about that at a later date. But then you go through your 3-month gainers, do the same thing. If it looks good, you take it. Like this one, Marvel, looks good. It's already on my watch list, but it made this big move, pulled back, made another big move, made another littleish move, but looks good. You take it, you add it to your watch list. MR. There you go. Add it to the watch list. And then you just watch it. And then I go over to my phone and I say, all right, I have 174.4. Yeah, 174.42. I go to my phone. I personally use my broker, which is Webull, and that's the app or the program where I buy and sell stocks from. So I have a scanner, which is my TC2000. This is where I look through all my stocks and find all the stocks. And then my broker is Webull. And I set all my alerts on my broker, and then say on Marvel, I'm going to set an alert on my phone for MRVL at 142.174.92. And if it jumps above that number, it'll give me an alert on my phone. And then I can go and check it out and see, does it still look good? Do I want to buy this? And if it's yes, then I'll buy it, set my stop loss, and then let it go. You can do it all from your phone. So, like I was saying, weekend process. I go through the charts. I spend about 30 minutes going through the scanners, building my watch list, go through my 6-month gainer, my 3-month gainer, my 1-month gainer, and then I set it all on my watch list, set alerts on any stocks that I like, and then that's my weekend process. In the morning, on say before the market opens, before I go to work, or if you have access to a computer at work and it's okay, then you can check it on your work computer. I go through the gappers and my watch list. So I go through the gap scanner, see if anything's gapped overnight, if anything looks good, like this one right here, SOXS. Horrible looking stock. You see how this is going down? Some people might say, yeah, hey, it's a good price to buy. Well, this was low too at 21 and it just keeps going down. Don't buy this stock. This stock is, look at this thing. It just keeps going down and down and down. This is not the kind of stock you want. Fig, not so great either. See, it's gapping up here. Yeah, okay, but zoom out on the daily chart, it's just going down. AX, see the difference? AXTI. This thing just keeps going up. Goes up, consolidate, up, consolidate, up, consolidate. This is the one you want on your watch list. AXTI. Bam. There you go. See, I even had a level here. Yeah. AXTI, 82.5. Here's the level. I saw it move up. Here it kind of consolidated, pulled back, and then it broke 82.5. I bought this thing, when was this? May 1st. I bought this thing on May 1st. It moved up, and it's still going up. Kind of pulling back now, so I don't think I have it anymore because I think it almost dropped below the 10, and that's tends to be my mark to sell the whole thing. But if it gaps up again, I might buy some more of it. But that's what you do. Go through in the morning, go through your gap scanner, see if you like anything, and then check out the volume scanner as well. See if anything's looking good, because typically when stocks break out, they'll break out with volume, and you can see them on your volume scanner. So before the market opens, I go through the gap scanner, I go through my volume scanner, I add any stocks that I think are looking good to my watch list, and then I set alerts on my phone. So if it breaks out above that level, it'll tell me. And then as the market opens, so the market opens 9:30 a.m. Eastern time, so whatever time zone you're in, it's 9:30 a.m. Eastern time. Uh, I typically take a small break from work, and then I go check my charts, see if anything's about to break out. When it 9:30 hits around, I watch my phone pretty closely, and then if something alerts me or if I see something going, I'll enter the trade, set my stop loss at the risk level that I want, and then let it go. And that's it. I go back to work. At the end of the day, I come back, check my phone, see if it's moved up quite a bit, and decide what to do. Does it still look strong? Does it still look good? Do I want to sell any? Do I want to move my stop loss? Minute process. That's it. And then I repeat the same thing the next morning. So, and that's all you really need to do. So to do this, I mean, you don't need to be a trading guru to do this. Trading is very simple. You don't need to stare at charts all day, and you definitely don't need to make things overcomplicated. In fact, the more you stare at the charts, the most likely are you're going to do worse. So all you really need is a repeatable system, emotional control, proper risk management, and the ability to focus on strong stocks. If you're buying garbage, so if you're buying a stock that's just gapping up 100% overnight and it's been down for the last 6 months, chances are you're going to want to buy it quick and then sell it even faster because you're going to go up and then you're going to immediately skyrocket back down. So don't do that. If you just focus on strong stocks and risk management, everything is so much easier. In future videos, I'm going to be breaking down how to scan for stocks, how to build watch lists in depth, how you enter trades, and how you manage risk. What is a stop loss if you're not already familiar with that, and how to manage and exit those trades. So if that sounds interesting, definitely subscribe, and I'll see you in my next video.